It's 12 o'clock. Welcome to Taking Stock. It is the 25th of the 1st, 2024. It's a bit of a dreary day, but to brighten it up, we have Vadim Alexander, Head of Healthcare, in his mint green jumper. Yes. I wish the markets were green today, Vadim. They're not. Yesterday, in fact, I had a colleague of yours on, John Mayer, and let's go with that, and all green on the screen. And you come on today, you're wearing green, and it's all red.
You can't win them all.
No, there we are. Nice little rally yesterday, but that's let's say the FTSE 100 is down, fifth of 1%. Some of the rises there: Intermediate Capital Group, Smurfit Kappa, Mondi, BP, WPP, Marks and Spencers. But it's all red here. And in fact, again, this is, I don't know if I mentioned this last week, but the AIM all share is down just a tad. It's it's faring the best out of all the indices, even though it is a tad. So it's holding up. Of course, it has had a bigger fall of late, down 44% from the high 2 years ago. Over 2 years ago now, Vadim. That's unbelievable, isn't it?
I know.
Let me just.
But I think they're playing catch. We're playing catch up. I mean, that's the point. Is these that index is I'd say the innovation index, if you like. It has all the tech companies, the biotech companies, all the innovations. So you would expect those were the sectors that were hit the hardest. Large caps move quickly, but then people look for risk elsewhere. So there you go. Yeah. I think it's catching up.
September the 7th was the high, 2021. So over 2 years ago. We're still not in a bull market. But there's an article out yesterday I read, which is from the City AM, and this is very interesting. It says UK is quickly escaping a mild recession. So first of all, then hang on a sec. It hasn't been official recession, but we sort of know this is in because the markets have been, especially AIM has been pricing this in. But they're talking about the which I covered yesterday, the Purchasing Managers Index, services and manufacturing. Now, manufacturing was still contracting, but they both beat estimates. And in fact, services, which is 80% of our economy, did very well. It's back in growth territory. And this is a couple of economists here. Chris Williamson, chief business economist at S&P Global Market Intelligence, said the survey's a promising start to the year. While Gabriella, this is the quote I like, Gabriella Dickens, senior UK economist at Pantheon Macroeconomics, said the recovery is the economy is quickly escaping the mild recession that we went into in the second half of last year. So that's the first time someone's actually confirmed almost an economist saying we were in recession. There's always been, we may be in recession, but Gabriella there is saying we were in recession. There's a picture here showing pretty much, this is the composite and down, and this is the GDP in grey and the output thing. So it dipped down last year, it looks like, and now we're back up here. This is the composite. The composite, of course, is the combination of the manufacturing and the services sector. So. If that's the case, then, which is what we thought, essentially, markets tend to start rallying, when a recession is confirmed. If that was a recession, and then we can go back here and say, well, this is probably the bottom then. Pricing the recession. And in fact, if you look here, the 50-day moving average is in blue. It's coming up. It hasn't crossed over. We haven't had a cross here, what's called a golden cross. This is back in COVID times. And it's tantalizingly close. And if that price stays above the 50-day moving average, it'll cross the 200-day moving average, and that'll be a golden cross. That hasn't happened for years. So let's look with the price is at 744, the 734 and 750. So we're not far off. 16 points off it crossing, which is a good sign, I think, isn't it?
Yeah, no, absolutely. And I think I've always been a believer that this was going to be a soft landing because I don't see where the fundamental problem is. In the big debt crisis of 2008, we knew where the problems were. The debt crisis was obvious to all. The entire mortgage backed security issue, all of the household debt was out of control. We're not in that position anymore. There is no debt crisis. Equity markets have come off. We've seen it come off. It's happened. So that bubble's burst and now it's recovering. I just don't see where the problem fundamentally. Rates have gone up. It was a worry a year ago. We've been at pretty high rates for a sustained period. and the economy hasn't slowed down drastically. It hasn't kicked the economy into a recession. That hasn't happened. So where's the problem today? Where's it coming from? I mean, do you see it? Where do you see the non-soft landing thesis anymore? Where's the danger?
I said yesterday, in fact, let me just clean my camera. Do you know what? I gotta apologize. My son bought toilet roll, right, from Asda, and this is what's in the toilet roll, like sort of emojis, as if you need reminding of what you need to do. But anyway, yeah, no, I said yesterday that it's funny that everyone's trying to guess which month the Bank of England will reduce interest rates. I think, what's the point trying to guess that? There's no point trying to pinpoint a month. Pointless.
Yeah.
What we do know is that they will be coming down. And so, already the American market's pricing in. The UK markets don't seem to want to. And I don't know why that is. It's, obviously, I don't know what's happening in America. It's maybe more liquidity, more algorithmic trading out there. But their stocks are starting to sort of bounce on the bottom there, and in fact, the Magnificent Seven are pushing it all up, so it's a bit distorted. But it's almost as if don't worry about the month interest rates going to come down. They are going to come down, and that will help business. It'll help equities because, like I said, people sitting on say 5% will not be getting that any longer. And if they see the market rallying, they'll transfer money. There'll be money inflow. So it's good. I don't see. I mean, you may see some companies who've got a lot of debt still struggling for a while, but even as interest rates come down, it'll help them. They'll re-rate because they've already been hammered because the debt they hold anyway. So
Well, we're seeing. I mean, we are just in terms of stocks. We are seeing that start to. We spoke about one last week. eTherapeutics. Like to speak about tissue Regenix this week, just as an example of. Now these stocks are actually delivering, so they are. They're generating good data, good announcements. But stocks are rallying again, and that's a good thing. We haven't seen that in 2 years, so we're seeing stocks. eTherapeutics doubled. Tissue Regenix is up about 20-30% in the last week. There's many others like that. It's one. We mentioned it last week. We're starting to see one by one these healthcare stocks get picked off in terms of rallies happening. Now it then goes into reverts back into a zigzag upwards. So some of the gains are taken off the table, but that's okay. It's the lows are kind of not as hot as low as the previous lows, right? So you're seeing that classic zigzag upwards. So I think it's happening. I think we're starting to see it. It's just not going to happen overnight.
Yeah. In fact, it's not a good tissue. It is on the most read. It's 10th most read here on Vox. Trading update for the year 2023.
Another strong year. Basically, another strong year. Yeah, I mean, this company. I hold this company. I've held it for years. I like it a lot. It's a company that's moving into becoming a proper company in terms of size of its revenues, and it's by virtue of that, it's putting it on the radar of bigger companies for an acquisition target. I think that's how it's going to end up. It's going to get acquired. So they do about $30 million in revenue. They've been growing for 3 years at 20% ish, 20 to 25% year-on-year growth in revenues. And now they've just broken into a bit of profitability, hitting all expectations, exceeding them actually. And it's sustained. The point is it's sustained growth. It won't be long, in my opinion, before people realize that it shouldn't be trading strictly on 2x sales. I think this company should be on 4x sales. But this is a symptom of the markets now, although the markets are picking up on this one again. And in the last week, it's become obvious again.
Yeah. So total revenue is expected to increase by 20.6% to 29.5 million, ahead of expectations. Revenues are 29.6 million at constant currency. Okay, and EBITDA, like I said, profitability. Yeah, it's had a rough time, isn't it? And like I said, it hit lows, retested lows down here back in March 2022. But look at that, it's been quite volatile. But you can see there a series of higher highs, a series of higher lows. Then it's come off a bit and consolidated, and today it's pushed up a little bit. But it's.
But the history, I think the key is over that whole period, genuinely the business has been growing at that same steady pace. They've only delivered over the last 3 years. I mean, revenues have doubled in this business in the last 3 years, and they continue to march forward at that pace. So that's why I like it. I like this business. They've become cash self-sufficient. The cash balances are growing now. out of organic cash flows, which is great. They have about 4.5 million in cash.
Yeah.
This is what we all kind of wanted to see out of this business, is now they're self-sufficient financially. You know, if they keep growing like this, they're going to start becoming profitable, quite profitable, I think.
What's the market cap? What's the market cap here?
It's about 40 million,
42.
45 million.
Yeah, 42 saying there. Okay, cool. Marvelous. TRX is ticker there. I'm just looking at the chart, and I mean, it has that sort of previous highs is in this range. Pretty much, it's not closed above 57, and it did yesterday before the trading update, and that's nice there. So it seems like it's trying to break into a new range. So it's consolidated for a while, a little trader range, but seems to have broken out of that. There we are, some profit takers there. It rose up high today. It went to 64 pence and it's come around to 59. But there we are. It's good news from them. Some news on the front page. Clean Tech Lithium hosts major green lithium seminar in Chile. Atlantic Lithium advanced offtake partnering. I've done in fact a chat with Neil. He talks about their the Ghanaian minerals investment fund putting 5 million in, which is good. Of course, the government backing their lithium project. Talked about that so yesterday. Let's get some more read. Helium One Global, biggest riser today. It's most read and biggest riser. You think, oh, that's a good rise. But if you look at the chart, and essentially they've been beset with technical troubles trying to sort of explore for helium, which is a very interesting market. In fact, it's a lot used in medical healthcare and all that stuff, helium. And there's quite a short supply. But if we look at the chart, then you'll think, okay, well, look at that. So that 50% rise today doesn't really register because it's been hammered. It's come down from. I remember talking to the CEO of the IPO here back in 2021. And look at that. It took off. Literally. Let's move that a second. Took off to almost like 30 pence. And then it's come down to 0.285, even with today's rise. But at least now seems technically. It's a tricky business at exploring. There's so many things that can go wrong, so many moving parts, but they have reached total depth on their well there. So the elevated helium shows over 20 times above background have been consistently measured. So hopefully a bit of respite. Well, I don't know if you'd buy that at the bottom. Greatland Gold was a popular one from previous. I'm hearing an update. Doesn't seem like people are cheering that on, but that was one of the best performers in the last few years. Novacyt, did you look at this? It's down 6.3%. Trading update. It's in your area. Unaudited statutory revenue expect to be 11.6 million, in line with management guidance of which 600,000 relates to COVID. So you can see now they're pivoting. Cash. This is very interesting. 44 million. The cash consideration associated cost of the acquisition of Eugene, and the group remains debt free. So they've got 44 million in cash. They are 33 million market cap. Now people think, well, doesn't make any sense.
Well, I'll tell you. I mean, the issue, and we've touched on it before. The fundamental problem that's there's a long shadow hanging, or they have this issue with the DHSC, which is many COVID businesses had, right? They have a dispute. The thing is the size of it is substantial. So I think it's something like 130 million, a claim against them from the DHSC. They have a counterclaim of something like 80 million, and that just hangs over them. So until that, and there is a timeline, which is good, and the timeline is fixed, I think, for June. Their court date is in June, and you'd hope that they would settle before then on some agreement. Part ways on a handshake would be ideal, but until that gets resolved, I think most investors are looking at this and saying, well, I don't know how to price that in, because a dispute it's difficult to predict what the outcome will be. So I think that's the issue with the pricing. In terms of the business itself, once that gets resolved, and like I said, I think it's in June, we'll go back. I think the market will return its focus on the actual business. They did make an acquisition of a company called Eugene, which has brought in acquisitive revenue, which is good. And that's starting to feed through results. The current trading statement was about 4 months of the year since the acquisition. So you don't have the full year effect yet of the Eugene acquisition. But on a pro forma basis, it looks like they're doing about 25 million in revenues, something like that. And the key is that there are no more COVID revenues. So we don't have to look at COVID anymore. This is all about effectively, there's still some residual COVID revenues, but they're de minimis. Now it's all about how they can take this combined entity and the pro forma, like I said, estimates at about 22 million or 20 million revenues, and start growing that revenue base, because that's all non-COVID tests, or mostly non-COVID tests. And that's the challenge. That's the future of this combined business.
They don't even, I don't think they even mentioned, they did have cash of, how much did they pay for Eugene? 16.7 million. They did have cash of 81 million in their interims. It's going to 44 now, but they didn't even mention the, I don't think they even mentioned that in the interim results. Didn't even mention the legal issues, which is all.
I'm
Eastleigh,
pretty sure they did. Well,
Eastleigh
it
is not far
should
from there.
be mentioned somewhere there. I mean, that's well established. They've been talking about that for years now,
Yeah, no,
since COVID.
yeah.
So I don't know. Maybe in the body text you should.
Oh yeah, yeah,
Yeah,
yeah, probably. If anyone knows that provisions,
yeah.
yeah, okay, it's probably in the thing at the bottom here somewhere, but
Yeah.
yeah,
So, well, it's still overshadowing this business. There's just there's no easy way to put it. It is what it is. It's a difficult situation. Until that gets resolved, I can see why people aren't buying this stock, or, it's putting pressure on the shares, basically, irrespective.
yeah,
Yeah.
yeah. They do mention it actually, in the footnotes and all that stuff. Yeah, yeah, okay, yeah, exactly. Okay, United Oil and Gas, confirmation of license, that's fallen off a cliff recently because they haven't been paid from the Egyptian sort of side of the business. Fevertree, of course, once a stock market darling, pre-close trading update. This is for the year ended the 31st December. Good operational progress there has resulted in doubling of EBITDA in the second half of the year, despite a challenging trading environment. Now, if you look at this, total revenue is, 36, about 364 million. And 6% growth. But I'm just thinking, okay, it's not a high margin business. I mean, I know it's got a bit of hype around it, but it's 1.1 billion. This company is, so there we are. Yeah, it's one of those ones that was first move advantage into that premium sort of mixers space, and literally it's from a low base, the growth was very good, and then if you look at that from the IPO, it couldn't do anything wrong. It was a stock market darling.
Yeah.
But now the market has changed a little bit, and of course you've got other people coming. When you have a company that steps into an area like that, like I say, with big margins, and they are gaining market share massively, then that's the capital markets. The people will jump in and say, "Oh, there's is opportunity there for other people." And so look at that; it went from 165, where did it go to 40 quid. It's a nice return, isn't it? Wow.
Yeah. Yeah.
And it hardly touched. Look at that. That's a 200 moving average there. It hardly touched it all the way up. Let me get rid of the 50 so you can see it more closely. Look at that. Hardly touched it all the way up. And all of a sudden it did. And then that showed trend was breaking down a little bit. And it's coming back down now from 40 quid. It's at £10. But I don't see that. Is there good value there? I don't know. I don't know if it is, but it doesn't seem like to me. I think it's living a bit off, past.
It's hard. It's hard to pile in at this level. I mean, don't you find yes, it looks cheap
1
by
billion,
historic standard.
Yeah, if
and,
you go
and
back
they're
there when they
delivering.
listed, it's probably 100 million market cap or something like that, And so
I mean, I
it's
guess
shares in the meantime,
my question would be, do you think they're going to exceed 6% growth?
I don't know. This market, no, it's premium mixers.
Well,
Somebody is now when that started years ago. When that started, I don't know if you saw today, which is quite annoying for brands and businesses. But when that started back in like 2014, the likes of Aldi and Lidl, there's less of them, and they weren't ripping off brands and stuff.
yeah,
Aldi and
absolutely.
Lidl now are everywhere. And I don't know if you saw today in the court has actually ruled against Thatcher's cloudy lemon cider. And where was it? I'll find it, right? And I
But
say,
even
well,
yeah.
how are they getting away with this? How are they getting away with this? Because let me just scroll down. I'm sure I saw
But
it
you
somewhere.
remember when Fevertree, came to market, it wasn't in every pub and every bar. You couldn't, it was like a novelty product and people would ask for it and you'd be happy when you find it. Now it's everywhere, right? And well done to them. I mean, it's an incredible story to have replaced something was already bog standard. So they've created a brand out of an area that, quite frankly, I thought was already established. So they've done something really well. But now it kind of feels like they've saturated the market.
Yeah.
So, I can expect 6% growth. I wouldn't expect 25% growth in terms of them stealing massive market share. Where is it that you go where you can't find a Fevertree bottle?
Yeah.
I mean,
Yeah. Well, exactly. And not only that, like I said, you've got this going on. Look at this. This is
and then
today.
erosion, and then erosion.
Thatcher's lose High
Yeah,
Court trademark battle with Aldi after copycatting. Look at that. That's Thatcher's, right? They've been
yeah,
around for years.
yeah.
That's Aldi.
I
Exactly the same, but it's cloudy lemon cider. You can see they're trying to, they're very closely copying that.
yeah,
They call
yeah.
this Taurus. Um, I think the people are marketing at Aldi and Lidl must have a hell of a laugh. So how close can we get? They're actually infringing.
Yeah,
How
yeah,
close
yeah,
we get a name? And
yeah,
the judge apparently said a taste test. He said no, it tastes different. I mean, I just think, come on, they've spent years on that brand. That is very similar, very similar indeed.
yeah.
And I think they've got even if okay, if it's about taste, then just change the packaging a little bit so it doesn't look like you're ripping. Because like I said, that's probably where I bet if you go into Aldi and Lidl now, there's plenty of lookalikes of Fevertree
Yeah,
stuff.
yeah,
So
yeah.
back when Fevertree came out and launched theirs back here, they
It was
probably
a
thought,
novelty product. Everybody
yeah,
wanted it. You know, it was new. Like I agree. And now it just feels like it's saturated a bit. And if anything, they're getting, as you say, eroded by, competitors, cheaper competitors, other brand names that are novel. It feels like that growth phase is gone. That initial first
yeah,
few years where it was novelty, they did well
yeah.
then, fantastic
Well,
for
that's
doing
it. If
it.
you if
But
you if you're a growth company and you don't have growth, then what are you?
well, that's it.
Because
That's what I
because
mean.
because if then people start looking at your valuation,
Yeah.
and then you realize it isn't actually good value.
Yeah, well,
It may
that's it.
continue growing at that rate, growing to
Exactly.
that value. But
Exactly.
yeah,
I feel like the growth phase is past for this business. I'm not,
yeah.
haven't looked at it that carefully, but you're seeing 6% growth. Do you think it's going to go back to 25% growth genuinely in terms of for this brand? I can't see
Yeah,
it.
yeah, yeah. Let me ask you a question, a bit personal. Vadim, what do you have on your feet?
What do I have on my feet?
Yeah,
What shoes?
yeah,
Oh, so do you want to see them?
yeah. Go on, show us your shoes. Yeah.
I will show
What?
you. I'm wearing On shoes. You know the On
Oh,
trainers?
okay. Oh, yeah. For a lot of those. Yeah, 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 yeah. They're good.
I have to say, so kind of like Fevertree, I think they've come into a saturated market and somehow have created something new, and they're doing really well.
Well, my friend of mine came down a couple of weeks back with his new sort of girlfriend, and they both had on. So he'd recommended them to her, and they both and they said it is walking on a cloud a bit. It's very comfortable shoes.
They
So
are.
shall I show you?
They're
Shall I
very.
show you? This is a theme behind this. Shall I show you what I'm wearing on my
Yeah,
feet?
yeah, yeah. Please do. Crocs.
Rainbow Crocs. That's
Yes,
because I walk
sir.
from that's because I walk through the garden to get to this my office. But I love my Crocs. I love them. Right. But
Yeah,
listen, there's also we just mentioned there two obviously very particular about our footwear because they are branded, they're doing very well. But here's an update here from Dr. Martin Boots. It'd be
yeah,
lovely if you had a pair of Dr. Martin boots out, but they've had a torrid time when it has come to IPOing. They IPO'd at top of the
yeah.
bull market, and look at that literally what 438 81 pence
I never
and it's
understood that IPO, quite frankly. I mean, Dr.
uh,
Martens should have IPO'd in the 1980s when they were
yeah,
really, really popular.
yeah, but the trouble is apparently I've talked to quite a few people now and they say that their kids are into Dr. Martin. They're still it is surpassing generations, but they're
Yeah,
not cheap. They're not cheap at all now. And if you
yeah, yeah,
if you looked at like the prices of Dr. Martin boots, it's phenomenal. And so in this cost of living crisis, where we are, let's go to Dr. Martin website here, and you can see they are promoting there. Let's have a look at this. Okay, acceptable. Oh, they want my credit cards already. But 180 quid.
oh yeah.
180 quid for a pair of Dr. Martin boots. 170, 200 they are. But you can see that these are.
I
But anyway, this is their trading update. Let's say
I
Q3 performance.
I haven't been in one of their shops or anything or seen the boots or the shoes
Yeah, that's
recently,
the
but
problem.
when they were made back in the 80s, they were excellent. They were the most sturdy shoe boot I'd ever seen. You know what I mean? I imagine,
How much are your ons? How much are yours?
well, that was back then. I couldn't even
No,
remember.
I
I
mean your
mean,
shoes you're wearing today, your
oh, the
ons.
ons, they're probably about 140 or 50 quid. They're pretty expensive, I
Okay,
have to
okay. So
say.
they are comparable to Dr. Martens.
Yeah,
Right,
they
okay.
are
So
pretty
next time,
expensive.
yeah. Next time, get
but
some Dr. Martens, yeah?
but we're just worth it. I like, sorry, back to shoe, where I am peculiar about these things. I used to be a loyal customer of Asics, right? Because they're very, very comfortable. And these, I would say, compete. But you know, companies just keep coming up with new things. That's what I mean about Fevertree. They go through their growth phase, and then it peters out when it gets saturated. What I don't understand about Dr. Martens is I never understood how the product. I thought the growth phase had passed, and you're right. There's intergenerational trends come and go, and maybe it's far more in an uptrend than I know. And you do see the retail shops did multiply. You know what I mean? Dr. Martens weren't around on the high street 10 years ago, and all of a sudden they appeared on the high street as shops. So
Yeah.
there is demand there. I don't
Yeah.
know. I could never invest in it.
Yeah.
And I'm glad I didn't.
230 quid is the highest I've seen so far. Let's look at the, let's have a look. Yeah, so 230, 210. Wow, that's quite, you know, for a book with all studs on them. You can see that generation of people though, kids
Yeah,
and teenagers, that's the one you want to get redeemed. That
that's
high
nice.
length boot. Anyway, let's look at the trading update. This is what they said. They said Q3 performance is in line with updated full year guidance. Of course, they probably downgraded that. And the revenue declined by 3% constant currency. What's direct to consumer? I think that DTC, isn't it? And
Yeah,
wholesale was down 46%, resulting in group revenue down 18%. So you can see here,
that's brutal.
yeah. Well, look at this. Yeah, all in brackets pretty much. Wholesale. The only thing that's gone up is direct to consumer reported year 1% or 3%. So yeah, but anyway, there's
Everything's
obviously
down. Even e-commerce is down. Everything's down.
yeah.
You know, it's not great, is it?
Guidance provided at the time of our H1 results for full year revenue declined. A high single-digit percentage year on year remains unchanged. All of the guidance remains unchanged. So, but saying that, you know, unchanged there. Okay, so they may, you know, they may sort of, it may settle here. You know, but they need to pick up a little bit from here because, like I said, is this the bottom? I don't know.
What's the
But,
price to sales, or price to what is their metric of
good
the
question.
valuation of the business?
Let's have a look. Dr. Martens boots. So 784 million. They were over £1 billion company, but they're
Yeah,
buying their own shares back as well. Half year report. So if we look at half year, we can sort of double that. But they're
yeah.
saying revenue is
Yeah,
well,
so it's probably
400
one-time
million.
sales roughly.
Yeah, one-time sales now. Yeah,
Yeah.
EBITDA. Oh, they're saying okay. EBITDA margin
EBITDA, the
19,
EBITDA, yeah.
20% margin there.
You know, that's
Okay.
not bad, actually. I have to say, that surprised
Yeah.
me, the EBITDA margin and the EBITDA. So let's say we're doing 150 million in EBITDA, and you just said there's 700 million
Yeah.
in market cap, right?
Right, I might do some more research in the Dr. Martin boots. Oh,
Yeah,
we made it to
it's
the
worth a
bottom now.
second look. I mean, maybe the
Yeah.
balance sheet is the problem. I don't know.
Well,
Maybe there's
no,
down the
I
balance
do.
sheet.
Yes, so actually, they do recur. If I recall it, they did have a bit of debt here. So look, revenue there. So the profit for the period 19 million, pretty much. But let's have a look. Yeah,
There we go.
borrowings 33 on there, and yeah, oh yeah, no. 290 million there plus 33 million. So yeah, they have got a bit more. So the EV, the enterprise value is a bit higher than that. So it's
Yeah,
350 million. So
and
it's
maybe the
so
servicing of
about
that debt,
yeah,
maybe,
it
you
looks like
know,
the EV is about 1 billion, pretty much. So we
yeah.
are. Okay. Yeah, so that's Dr. Martin Boots, Fevertree. I like Team17. Right? It's one of the gaming companies have been hit massively over the last few years. They've been some of the companies got seriously in trouble, belly up pretty much, and looking for emergency funding. In fact, Tiny Build is one. But
Mhm.
Team17 was almost the golden child of this sector, but it's also taking the hammering. Now, this is where I see good recovery plays. When you get the best of the bunch, that's taking the hammering as well as everything else. It's just, to me, it's just a time it may not play out, but it's worth looking. I mean, look at that. It's come down from a high of £8.70, and it's come down to talking about 20. It did gap up today on these results, but I don't know why I put that there. But they did say that.
What's
The
it
global
down
games
to?
label.
Sorry.
So go on.
What's the current price? It was from
So
the
yeah,
highs of it.
it's 223 at the moment. It's been down from
Okay.
sort of eight
Yeah.
quid odd, is it? I think it was
Yeah.
9 quid,
Yeah.
7 quid. But they do say in this, in there, where is it by? So they are 325 million market cap. And they do say good margin on the business. So it's not about sales really. All parts of the group perform well over the key Black Friday and festive periods, in particular Team17 games level. As a result, as communicated in November, management expect full year adjusted EBITDA to be at least 28 million. So we are, what's that? If you talk, it hasn't got any debt. So we are
About 10 times EBITDA.
11 times, 10, 11 times.
Yeah.
So they were growing very well. Includes non-cash title impairments of up to 11.5 recognized in the period.
What was the growth rate? The growth rate of revenues? Because
Yeah,
I
well,
guess
they
that's
did. Well, last year, I don't think they're going to be growing, but they have grown very well the last few years. But it's worth doing some research on them. But it's one of those, can they get growth back? It's like many of these
yeah.
companies now, that growth, will the growth come back? And I assume it will. I just think gaming is taking a bit of a hit. And of course, you've got that, COVID period where people were doing more gaming. So it's
Yeah.
hard, the comparables, where will it settle? Where's the natural growth here? So you have to wait and see. But I do like Team17. So they got decent amount of cash. They got no debt, and they are, cash generative, and they were growing. But it's actually, where will that growth settle now? I mean, went through a golden period for gaming companies during COVID lockdown.
Yeah.
So it's a hard comparison.
Yeah.
A couple of things. What else is there? A company I own a few shares in come up with trading result today, interim results. They're basically like a little bank. No banks don't loan to small businesses now. This company does, and Time Finance they're called. The own lending book is up 29%, 43 million. So the revenues 15 point. They're only a 33 million market cap. So this is interim results. Okay. And profit before tax is 2.7 million. So you're going to be over 5 million in profit before tax, and they're only 30 million market cap. They've got 1 million in cash. It seems all good. Net assets up 7%, 63.9 million. So the net assets are way above. The net assets are literally double their share price where they are at the moment. And net tangible assets up 36. So even the net tangible assets are above the current share price. Strong visibility of future earnings, with earning about 26%. Continued positive trading momentum throughout December gives significant confidence that full year trading will be at least in line with expectations. That's quite a nice result. So you want to hear that, don't you? It's nice when you hear that. And in fact, the chart on this is very good. I mean, it's come into a bit of a range, but look at that. It's done very well, and I see this continuing because banks are becoming more particular about who they loan to. And so, and as long as Time Finance are very careful of who they loan to and the impairments don't go up, they are stepping in where the banks have left, small and medium-sized businesses. So they do, all kinds of finance for companies. But so I think it shouldn't. It probably needs to go in a range a little bit now because it's travelled well, very well. But nevertheless, they keep improving. I think it'll move up again. But I quite like that Time.
It's doing okay. Yeah.
I own a couple of those. Foxtons, by the way, beat expectations. Foxtons, another one. I was nearly going to get into Foxtons because they didn't
wow,
start
that's a recovery.
They didn't start to recover, and I quite like that they do a lot of through. It's not about just sales of real estate. It's about lettings and all that stuff, which is a buoyant market in London. Very buoyant. But they have taken off a bit. And I was looking at them. I got a price alert on them. I put a price alert here, and they gapped down. And sometimes I should be more particular about the price alerts I put on because I get so many. I ignore a lot of them. So my lesson is, only put price alerts on companies you intend investing. So I did the fundamental research on them, and then I just wait then to see if the chart takes off. And it did, and I ignored it. And this is around about sort of 43 pence, and now it's at 52. It's come off a little bit today, but nevertheless, they do say they're beating the expectations for the year. The 157 million market cap. This is trading update. So 147 million adjusted operating profit of 14 million. There's improvements across data, culture, brand, and look value. So lettings, which represents 70% of group revenue, grew 16%. So 70% of the business grew 16%, delivering over 100 million in revenue. Could be 2 lettings acquisitions, sales outperformed. So the fastest growing large lettings agency in the UK, they say. So interesting there. Be interesting to see when's there. They do say outlook is very good there. and all that stuff. But yeah, it's
Well,
one
I
of the
guess,
things.
I mean, it is a big risk to have called that ahead of time, right? Most people think of these plays
Oh, right.
as real estate sales, right? And with rates where they were, people were not expecting a rebound in the housing market, and it came. You know,
Mhm.
that's the
Mhm.
astonishing bit, is that there is a rebound going on. Prices are still have started to go up again. And you've seen that with all the big housing stocks, right? You know, we mentioned Persimmon last time. Uh,
Yeah,
you know, even the builders are seeing their stocks re-rate upwards, which, quite frankly, is quite a surprise given where interest rates are. And
yeah,
you know, irrespective of interest rates stopping and the fact that mortgage rates are coming back down, I would it took a brave person to pile into that sector.
yeah,
Do you see what I mean? Don't you
yeah,
find, like, with all of the rate we're at the top of the rate cycle, it's true, and
yeah,
rates may come down, and that's fine, but they're not going down to 1%, you know, and I
mhm,
just feel like the mortgage pain hasn't been fully felt yet. I don't think
yeah,
it's going to cause a recession. That I still believe that, but people who piled into Foxtons ahead of that, or into, you know, Right Move or anything
yeah.
related to
Turner
real
Wimpey,
estate, and
all
I
the
buy
builders,
it
yeah,
that they're, you know, lettings is one element to this. It's not all sales. It's not all about, you know, house sales, but nevertheless, it's a pretty big risk to have piled into that, don't you think?
yeah, yeah,
In
yeah,
this
yeah, yeah,
environment, in this rates
yeah,
environment.
yeah. Dagger says Wizz Air had some bad news today. Maybe a buying trend with airlines moving north. So you're in easyJet, and do you own
Yes,
easyJet?
actually, easyJet had a good announcement earlier in the week. Their stock
Yeah,
actually rallied further. I was
yeah,
on rereading it. I mean, I'm still in, and I'm going to stay in. I like that stock. I think it has traction. On rereading it, it wasn't as stellar as the shares reacted, in my opinion. You know, the
yeah,
shares reacted positively. I'm delighted, but it's a good statement. Don't get me wrong. It's just that, you know, profits are smaller than I would have liked to see. But then again, it's a quarter. It's also seasonal, right? So
yeah,
the quarter isn't traditionally their historic strong quarter, right? So it
yeah,
isn't a good barometer necessarily. I would say what you really want to be looking at is how their bookings are lining up for the year ahead, and that's strong, they're saying. So, you know, this quarter was okay, but it's really about the next the next 3 quarters. So yeah.
yeah. Well, there's a Q1 there for 125,000 flights. But yeah, no, I did look at that. I realized there are certain, well, in fact, it's even halves. Certain halves are loss making, aren't they? The other half is profit making. But
Yeah,
so
exactly,
passenger
exactly.
growth is passenger growth. So almost headline loss before tax for the Q1 is 126, down from 133. But you can see the passenger growth 14% up year on year. Um,
It's
Load
hard to
factor,
glean from this quarter from the numbers.
yeah,
Do you see what I mean? It isn't a representative quarter of the whole year. Just due to the seasonality of travel, right? So,
yeah.
but I guess in the outlook statements and all that, they're saying that things are going quite well for the full year, their expectations. So that's good.
Yeah, I mean, it did say here, I said, but saying that Wizz Air today, I mean, having a good one. Although still early, bookings for summer 2024 are building well, with a turn of the year bookings period showing an increase in both volume and pricing compared to the same period last year. There you
Exactly.
are. So it's looking good.
That's exactly the point. The point that
Yeah.
that is, I think the market has received well.
Okay. Yeah. So yeah. So look at that. It was previous sort of highs there, and 529 is trying to break those. But
Yeah.
if you look at Wizz Air today, and it hasn't got as strong as brand as, let's be honest, easyJet. And in fact, where do they fly to Wizz Air? I don't know much about them. Is that their logo? If that is, it's awful. 2 billion market cap here. Q3 results. And in fact, what are they saying here? Is the outlook bad? Because straight away I'm seeing double-digit growth in passengers carried, total revenue up, EBITDA, well, it was up from a
Yeah.
2.8 minus. Margin 1.8%. Wow. Operating loss 180. Okay. So I ask him, what's the outlook then? It doesn't say. In fact, uh, we have received awards. Each of our awards. Current trading starts being positive. Selling load factors are trending at similar levels to last year. Also, they're similar levels, whereas easyJet are better levels than last
Yeah.
year, pretty much.
Yeah.
So maybe that's uh, long growth plans. Yeah, well, it doesn't seem as bullish there going forward.
What happened to the shares? Like
Well,
what?
they get
Sorry, I missed the chart. What
so
happened?
it was rising, and then it's starting to fall off this last couple of weeks.
Okay.
But they are well, they're down -1 point, but they've started lower and they've rallied. So they opened lower and rallied a bit. They're still
Mm,
below yesterday's close, but
mm,
yeah. So I mean, the market's a little bit undecided. It's been bought up a little bit. So there we are.
mm.
Yeah. Was there anything else? Oh, there's IG Group as well. Obviously, the biggest trading platform in the UK.
Have things picked up a little bit?
Down 8% today. On this
Terrible.
news. So interim
No.
results, 6 months, and they say straight away. Continued execution of strategy, sharp focus on clients, costs and capital has served the group well in soft market conditions to deliver attractive margins and return to shareholders. So their revenue's down pretty much, down 9%. Net trading revenue down 19%. So yeah, it's all, well, in fact, no, it's that net interest income. Of course, the income's gone up. The income they earn on interest. But yeah, so obviously the market didn't like that. What's the
Yeah.
outlook? Of an outlook? We remain confident and optimistic about the outlook for IG and continue to do well positioned. But it's a bit of a messy chart. IG. It's literally.
Yeah.
Look at that. It was messy coming down, spiky, dropped off a cliff here, which I assume is 6 months ago, which is the March, results. And then it started rallying. I think CMC, which is in that space, it came
Yeah.
out with a very bullish trading update recently. Maybe
Yeah.
that was rallying in sympathy with that. And then
Yeah.
all of a sudden it's gapped down today. Look at that. Down 7%. So yeah,
It's
CMC Markets, CMCX, literally, starting to take up a little bit and gapped up
yeah.
on their trading update. But so sometimes trading updates, they give you the best and the highlights of everything. What you need really is results, because then you see the full picture. And so this is
But
the
that
interim
said, though,
results.
that said, I would say that volumes in these so financial markets are what drive this, right? So if there's a recovery, liquidity improves, their trading improves, as in their stock trading increases, and therefore their revenues increase because it's
Yeah,
whatever commission based. But CMC we touched on not long ago, and it's in keeping with the recovery. Whereas IG seems to be lagging here. They don't seem to be recovering.
yeah,
There's a new tailwind that's emerging, which is markets are improving for all of these businesses, but it feels like CMC is the first mover
yeah,
out, whereas IG doesn't seem to be. And to be fair, it's become a lot more saturated, right? Remember when IG were really the dominant player, right?
yeah.
Spread betting, right? Spread betting, they were really the platform. But with all these new entrants, it feels like it's proven a bit more difficult for them. I don't know. Maybe that's
You
the
know
problem.
what's funny is I did a first time ever did that. I did a Zoom call with a classroom of sixth formers for my
Mhm.
Champion Investor website,
Yeah,
championinvestor.co.uk. It's
yeah,
fancy, because I mean, I want to encourage people to start learning about investing, take an interest in it, because it can benefit you long term. And so it went very well. And one of the guys was asked, "So what do you hold?" In fact, they asked, "Who's doing best in the class?" And this guy says, "I am." And he said, "What do you hold?" And he said, Narf Industries." And I thought, I've heard them. I know nothing about them at all. In fact, they came out with a trading up today at 15%. So I thought, that's interesting. So it's a corporate update. They call Narf, 14 million market cap. And so well done to that sixth former who picked these, because year-over-year revenue growth, 130%, because from a low base, but nevertheless, up from 2.5 to 6
Hmm,
million.
hmm.
So EBITDA positive, improving from loss, a loss last year of 2.6. So the company there ending cash of 1.4, up from 1.2 last year. So it's very interesting. They're in cybersecurity,
Cybersecurity. Yeah,
specializing in high-end threat intelligence and critical infrastructure security. So it's very interesting. There's a lot of players in that space, but it can get quite thin. But they seem to be turning it around. It seems to be a lot of board appointments here. So you assume the previous board has been kicked out. I
yeah,
assume, and
yeah.
now these are restructuring it, and they're changing it around. So it's
What's
very
the
interesting.
chart done? What's the chart done?
Yeah, well, it hasn't really rallied that much. So it was quite interesting to see that this sixth former picked a stock I'd never heard of,
Yeah,
and
yeah,
it's come
yeah.
out with
Yeah, so
a good,
we're all
it's
gonna
come out with
look
a
at
good,
and buy this stock.
yeah. But look at that. So that's could be a good recovery play. That, I mean, it's downward trend, but it's really broken onto that 200-day moving average today.
Yeah.
And if it can move up, it'll be quite good. But it seems, early days, but it seems like the new board are turning it around,
Yeah, that looks interesting. The growth
Marvelous
is pretty
stuff.
strong. Yeah.
Yeah. Okay, Dagan says, Wizz took a hit on the Israel flight. So, because they have Israel sort of, yeah.
But they all did. Wizz, easyJet, they all took a hit. easyJet in their statement, like I'm just saying it's impacted
Yeah.
all the discount airlines, and
I
they.
suppose though, because I would listen to a statement from, I think it was a BA or someone related to BA, and they said literally it's less than 1% of their flights, so half of 1% of BA's flights. I suppose it depends how many flights you run to that,
Yeah,
how big it takes up with your,
yeah,
anyway,
definitely. Yeah.
cool. Marvelous stuff. Cheers for that, everyone. Thank you very much. If you could hit that thumbs up button if you like the content, and subscribe to the channel by all means. And don't forget, there's a Vox Markets app that's free to use. Just download it, voxmarkets.co.uk/app. Vadim, thanks very much for it. Speak next week.
Excellent. Thanks, Justin.